You know, it's kind of funny how Trump rhymes with pump, also with dump, because that's kind of exactly what he's doing with crypto so far and even with stocks. Look, after pumping the crypto markets and the stock markets at the end of 2024, after he got elected, everybody was, all right, Donald Trump's going to come. He's going to pump our bags to the moon. He's now crashing the U.S. economy and taking financial markets globally down with it. So in this video, I'm going to break down the theory that this is all part of Trump's insane strategy and why he might be willing to cause short-term pain in the markets for long-term gains in the economy that will usher in the golden era for crypto markets and stock markets and really everything. Because, you know, he can just blame it all on Biden right now. Oh, I'm just fixing Biden's broken economy. He did all that crap, not me. But even still, there's no way to sugarcoat it. The U.S. is right now in a financial chokehold. The USA is running a record $1.2 trillion trade deficit. The budget, what a mess. Trump is walking an economic tightrope right now. He's inherited a real mess. But there's a massive problem. According to Arthur Hayes, the U.S. Treasury has $10 trillion worth of debt that it needs to pay and roll over this year, and it'll be refinanced at much higher rates, which is not good for America. With $7 trillion of that debt coming due in the next 6 months, Trump needs the Fed to act and to get rates down. But here's where it gets tricky, because those interest rates right now, over 4%, are going to be a nightmare for the government, costing a lot more to refinance. So the end game is clear. The U.S. needs lower bond yields. But if they cut rates too fast, inflation comes back up, especially with tariff fears now. A lot of things, a lot of moving parts going on here. Therefore, the Fed must and will be forced to act to bring in lower rates. But so far, Fed Chair Jerome Powell has ignored Trump's request to do so. He says, you can't do it, man. We're going to spike inflation again. So the big question is, how does Trump take it into his own hands to get those lower rates that he wants? And of course, that'll stimulate the housing markets and really stimulate everything again when it happens. The Fed's not budging because inflation's proven to be too sticky. So what's a man to do? Well, Donald is bringing in his favorite word, his negotiation tool, tariffs. Instead of finding ways to stimulate growth, the Trump administration has decided to slow things right down by creating massive market uncertainty with tariff talk. Trump isn't just talking, he's already slapped tariffs on America's biggest trading partners, Canada, Mexico, China. Canada has been hit with 25% tariff on imports, which will affect things like cars, oil, electronics. Mexico is facing the same 25% tariff. Mexico, of course, is the largest supplier of stuff like fruit and vegetables into the USA, so get ready for your 5 a day to cost as much as your eggs, which of course are astronomically priced now. The real bull market all the time was in eggs, guys. We missed it. China has been hit with 10% imports. I think actually maybe 20%. I think it was 10% plus another 10%. Anyway, it's getting all... Numbers keep moving so fast, it's a bit crazy. All this stuff could, of course, push your price of tech gadgets and devices and cars and all that stuff out of China up as well. And the markets have been in a total panic mode since this stuff's been being announced. The S&P 500 has wiped out year-to-date gains. A global trade war has begun, and equity markets are not feeling the vibe. Investors have been fleeing to gold like inflation is rising, bond prices are rising like inflation is falling, sentiment in crypto is collapsing like the bull market has ended and it's never going to come back. I'll see y'all again in 4 years. Here's the big one. The US dollar index, the DXY, the Dixie, is already weakening after dropping to as low as 104. It's on a downward trend right now. Financial markets are becoming increasingly volatile, leaving investors confused as hell. What the heck to do now? There's so many conflicting signals. And now the first quarter is on track for a negative GDP in the USA. Not great, according to Atlanta's Fed GDP Now tracker. US GDP is projected to come in at minus 1.5% for Q1, potentially even lower. And just like that, the market is pricing in 3 interest rate cuts this year. The Don's plan is working. He just alpha mugs everyone all the time. Look, risk assets like crypto are unfortunately just collateral damage for this plan. Now, before we talk about the bond markets, I'll give a big shout out to today's sponsor, Loaded Lions. If you guys ever liked an NFT and wondered if it was more than just a damn JPEG, well, cue in Loaded Lions, because this is where cool art meets real utility. It is the flagship NFT collection of crypto.com with their full support. Loaded Lions is shaping up to be a powerhouse brand. Holders will get exclusive perks like bonuses in Loaded Lions main city game, special giveaways to major sporting events like ringside tickets and stuff like that, access to premium mints, benefits within the crypto.com app for better yield returns and stuff like that. And now they've launched the Lion token, the token powering the Loaded Lions ecosystem with impressive staking rewards available through the crypto.com earn program and DeFi staking vaults. The Lion token is packed with all kinds of potential benefits. So if you're a crypto.com user, you may want to be paying attention, okay? Because that's just the beginning. Plans are already in motion to bring in a whole bunch of different integrations for the Lion token into the crypto.com Visa card. Yeah, very cool, right? I know a lot of you guys have those awesome Visa cards, so you might want to pay attention to what they're doing here. We're also going to see integrations for the Lion token into the Loaded Lions main city game, and even some governance features coming out for that eventually as well, all helping to shape the project's future. Learn more about what Loaded Lions are doing, especially if you're a crypto.com user. You might find some great benefits in there for you. Check out the link down below in the description. You can learn more and join their community. Thank you again for supporting our sponsors. Okay, so is Donald Trump just playing, I don't know, 20D chess here? He's thinking so far ahead he can't even think about what the hell he's doing, man. Just out there, man, doing stuff. When markets get hit with uncertainty, whether it's from tariffs or fears of recession or whatever it might be, investors don't just sit around waiting for things to get better. Oh no. No, they panic. They lose their minds. They run around like, monkeys with their dicks cut off, man. They get scared. When they get scared, they run for the exits. In fact, the recent stock market sell-off saw investors basically be the most scared they've ever been since the absolute bottom of the last 3 equity bear markets. Crazy stuff. The safest place to run to, of course, historically has been the bond market. Bonds, especially U.S. Treasury bonds, are considered to be low risk, which, of course, makes them highly attractive during times of economic uncertainty. Where's the stock market's going to go? How are all these tariff things going to play out? So when stock market investors flee to bonds, the demand for bonds increases, which of course then pushes bond prices up. But here's the catch. As bond prices go up, their yields, that is the interest that is paid to people for holding the bonds, goes down. So as investors scramble into the safety of bonds, the yields of those bonds are actually starting to fall. Just look at the 10-year U.S. Treasury yield. It has been falling pretty steadily. It was at 4.8% earlier this year, but every time that Trump seems to mention the word tariffs, it drops a little bit more. It's gone down quite a bit already this year, and that's not a coincidence. If Trump can crash yields low enough, again, if you can alpha mog the economy into just going down, into yields to going down and the dollar to going down, then the U.S. can actually refinance its debt cheaper without Jerome Powell having to lift a finger on rate cuts, although this might also help force Jerome Powell into doing rate cuts. Tariffs, of course, would usually be considered to be something that is inflationary and thus bad for the economy. Part of the reason why equity investors are freaking out. Normally, this would cause the 10-year to spike. It's actually going down instead because it is bringing in so much uncertainty. People are so afraid. Again, the worst fear readings ever when the stock market's only 3% or 4 5% off of all-time highs. Crazy. Investors are selling stocks. They're moving into bonds, which is exactly what Donald Trump wants. You're playing right into his hands. Now, obviously, this is all a gamble. It's a risky move from Donald Trump. It's clearly bringing a lot of short-term instability into markets. But if successful, it will allow the government to refinance its debt at much lower rates, which the USA needs to do because the payments on the interest are going to be completely unsustainable and destroy the U.S. economy in a couple decades as all this unsustainable debt keeps getting it's a mess. It's a mess, guys. Now, is all this actually going to work, or is Donald on the track to completely wreck the economy and bring in the new Great Depression where there'll be pulling of hair and gnashing of teeth and just generally Goblin Town vibes? Well, there are 2 possible outcomes. The bear case is that these import tariffs, of course, are going to trigger a U.S. recession. Odds of that happening this year are now at 40%. If a recession happens, then game over for, well, a while. Unemployment's going to spike. People are going to lose their jobs. They're going to lose their homes. Markets are going to bleed horrifically. The bull run dies. Any hopes you had of escaping the matrix are over. You're stuck. Then there's the bull case, which we like the bull case. Okay, you have to keep the bear case in mind because shit can always go wrong. The bull case. Trump's pressure forces the Fed to actually cut rates. When that happens, markets flip bullish again, sending stocks and crypto to the moon. He will successfully weaken the dollar. He's going to cut taxes. He's going to cut waste spending. He's going to refinance that debt at lower rates. going to bring more investment into the USA. All this stuff's happening, right? And basically, he's going to usher in the golden era of the US economy and the US markets. And we're all going to get so tired of winning, we're just going to want to stop winning. We're going to get so tired of making money, we're just going to have to stop because it's just too much money at that point. Sounds pretty good, right? I mean, hey, look, investors love a good rate cut. And as the likelihood of rate cuts coming increases, investors get more bullish. As the cost of borrowing becomes cheaper, it just has so many carry-on effects. It's much needed liquidity that can bring risk assets back up when market rates drop, when interest rates drop. People can buy houses again, people can borrow for their businesses, stimulates the economy. Now, according to Arthur Hayes, just a 0.25% cut in the Fed fund rate would equate to $100 billion of liquidity in QE. This is a big impact. So this is the way to stimulate without actually printing money. Now, if the Fed were to cut rates all the way down to zero, that would equate to $1.7 trillion equivalent of QE. Again, not actually QE. Of course, the Fed may not cut rates down to 0%, but what if they cut 100 basis points this year, a whole percentage point down? What it does mean is the liquidity is most certainly coming. If Trump pulls this off, then we could see a repeat of what happened during the Reagan era. When Reagan took office in 1981, there was some short-term economic pain as we saw inflation being brought under control, right? The need to deal with that problem. But guess what followed? What followed was a decade-long period of unbelievably bullish economic expansion and everybody getting hilariously rich. Now, if history rhymes, then Trump's aggressive strategy could actually be setting us up for the golden bull run, the final chance to get mega rich before AI and robots take your jobs. No, seriously, guys. AI and robots are literally coming for your jobs. The next 5 to 10 years, we're all going to be unemployed. And if you don't get rich now, you're screwed. That's my opinion. I'm sticking to it. And who's been buying the dip recently? Well, Trump, at least his World Liberty Financial Company, which is run by his kids, they just doubled their ETH holdings this week. I guess they love paying ETH. Anyway. Now, why would Trump be loading up on ETH and Bitcoin, by the way? And they bought some Movement Labs Move token. Why are they buying if everything's going to go to zero? Because everything's not going to go to zero. That's why. Okay, that's it. I'll see you next time. Peace.